All right, guys, it's been a minute since we did our last live stream. I think about a couple of weeks now. Lots have happened. We've had an epic rally in the market. I mean, not so much today. Today, you saw the S&P 500 sell off about 0.1%. You saw the Russell 2000 rally 0.3%, and you saw the NASDAQ give up about 0.6%. But overall, the market's done really well. You even so much so that you have the Wall Street Journal proclaiming that because we're 20% off the lows, that a new bull market is upon us. That only took 6 months for us to get to that point. But you still have inflation that's running hot. I mean, remember, we were falling apart in March because we had an 8.5% reading. Now we get an 8.5% reading in August, and all of a sudden, all is good again. Now, I get some things where people are saying, well, we shouldn't be so much worried about what we've done so far, in terms of how much it's changed. We should be really worried about the most recent month in July. It being a 0% change means that we weren't inflating anymore, right? But that doesn't mean that I don't necessarily agree with that. Like, for instance, if you take a journey and you go 500 miles over the course of 12 hours or whatever, and then you stop for a break for an hour, that doesn't mean you're back home. You're still 500 miles away from home, so you still have to get back home. But 0% is good. I mean, that's good for the economy. I mean, God knows I don't like paying all these higher prices, but they're not necessarily coming down yet either. So market loved that CPI report yesterday. I guess in hindsight, it looked like it was going to rally almost on anything that wasn't over 9%. And you have this rally now where you're like, okay, it's getting a little bit crazy. It's getting a little bit out of hand. How much higher can this thing really go? So for those of you who are new to me doing these live streams, I do them on YouTube, Twitch. I don't even think anybody listens on Twitch, honestly, but I do them on Twitter and I do them on Facebook, but mainly it's on YouTube. I take your questions, take your answers. I'm going to go over the market first. I'm going to talk about, a little bit more about what we've seen out of the CPI and how that relates with the Fed going forward. And I like to drink a little whiskey while I'm doing it. So today's whiskey is it's almost at the end of this bottle, but this is good stuff. If you go to a Costco's and they have it, really good stuff, bottled in bond, Kentucky straight bourbon whiskey. I like it a lot. Nice taste to it, and it's like $24 for a full liter. So it's a good deal for the price and for the amount that you get. So. Okay. So is the Fed going to be lowering interest rates? I don't think so. I don't think they're going out of their way to give the market any kind of belief that they're anywhere close to lowering interest rates. Why would they? They still have about, $9+ trillion on their balance sheets that they got to get rid of somehow. The market's really assuming the absolute wrong thing, that they're going to pivot. They haven't said anything to the tone of we're going to pivot. And I know that Jerome Powell likes to get up in front of the audience and say, things that, whisper soft nothings in everybody's ears and gets them all giggly and makes them want to rally the markets and buy everything in sight. But in terms of their rhetoric, they're still looking at raising interest rates going into 2023. So I think it's a little bit crazy to fight the Fed in this instance when they've given us no assurances or even led us to believe that they're going to actually do that. So with that being said, we're going to go into the SPY here. We're going to look at all of these charts and we're going to figure out this market together. It's a wild one, guys, but let's go ahead and get started on that right now. So IWM. There we go. Give you a little different perspective there. On IWM, we're going to start off with this one first. This is the one that's really seen a lot of aggressive buying of late. I mean, just unfettered buying. But now look at this. Touching the 200-day moving average, and that's where we saw a little bit of a kickback from the market today. Did not want us going above that 200-day. And while it doesn't have perfect relationship with the 200-day moving average, you can see that even though it might go above and below it for a little bit, there is definitely a reversal that tends to happen off of this 200-day. You saw it back in December. That was the last time we really tested it. Tested today. We got that reversal as well. You also got the bounces off of the 200-day moving average within a 1 to 2 day period. So that's significant on its own as well. So you got this bearish wedge, and this is where everything kind of gets a little bit hokey here, where we had the bearish wedge, we traded inside it, then we had the big move yesterday, and then we had the gap higher today, which just blew my mind that we're even gapping higher today after yesterday's move. But nonetheless, it started giving it back up. So going forward, where do I see this thing going? I think there's a good chance here, at least, tomorrow or so, we will probably test this rising trend line to some degree. And then from there, I would look to see if it breaks. Let's go back down to this 190 level and see how that holds. So there could be about 2 to 3% downside in this market. I would say probably closer to 3% at least from the profit takers. Now, that's IWM. One that I've been paying a lot of close attention to is this Q's. Big time move out of it yesterday, and then again today. It tried to follow through today with this move outside of the declining channel. That was significant. It gapped above it after struggling with it for the entire week. Now it's right back down to this declining channel as support. Can that support hold? That's the big question here, guys. And if it doesn't hold, then there's some support right here at 317, not too far below. So you're talking about maybe about 2% to the downside. But ultimately, this little short-term rising trend line has been a good support area for the NASDAQ to bounce off of as it's seen pullbacks. And we're quite disattached from it at this point. So is there a potential for a pullback to this 296, 297 area before we actually get a significant pop out of the market? This one really surprised me that we pushed through it yesterday so easily following the CPI report. Now on SPY, not as rosy of a picture. So we had these two consolidation periods here, and we were outlining this on a previous video, and then we broke out above them yesterday. So that happened. So before we actually broke down below them. This time around, we break above them. But we'll go ahead and take them off now because they're not all that relevant at this point. You also have this rising trend line here that has held up pretty well. So this resistance level, that one's broken. You also have another resistance level right around here or so. And it's not a perfect resistance, but there is definitely some pushback there to be aware of. Does it get to this level? And if it does, is it going to be seeing like a converging resistance level off of the January, December highs that ends up reinforcing this resistance level here with one of its own? So these two resistance levels are going to be very key. Do I get bullish on this market at this point? I'm not too inclined. Let me show you a couple of charts here that would suggest maybe a little bit of caution warranted. Last time we had a massive rally back in March. Where did we bounce off of? We bounced off of once we dipped below the 20 mark. We got below the 20 mark yesterday. We saw a little bit of a pop today. Then you look at T2108. This is the percentage of stocks trading above their 40-day moving average. This is one that I've probably been using for about 15 plus years just to help me get an understanding of how bullish or bearish a market is. In a bear market, a rally like this, just crazy, okay? This is the strongest reading that we've seen since December of 2020. So a 79% of stocks trading above their 40-day moving average is extreme, especially when we didn't get a single reading that high all of last year combined, and that was a very bullish market. So we've bounced off of the lows where there was only like 8 or 9% of stocks trading above their 40-day moving average to where now 79% has, and that's just under 2 months period of time. So chasing stocks at these levels, not really something I want to do. I mean, one of the trade setups that I really liked coming into today, and I didn't trade it, but it was definitely one that I was highlighting and one that I was saying, okay, while it's a really good setup, I'm not sure I'm overly crazy about buying at these levels on the market. And guess what? This was a nice basing pattern, almost like a double bottom here when you take this point here and then this point, and then it broke above it yesterday, couldn't hold it into the day, then it gapped above yesterday's highs, and again, couldn't hold it. Thankful I didn't buy it, but nonetheless, that is what we're kind of dealing with is an exhausted market. I mean, even Google, despite it being in the basing pattern, it's managed to rally from 104 all the way over to 120. And this is a multi-trillion-dollar company. So you're talking about 15, 16% for a stock that's worth over $1 trillion. So almost 2 trillion, I think. So in any case, that's the kind of stuff that we're dealing with right here. And yeah, I added this new camera angle just because I know you guys like the shirt. So I'm like, you know what? I'm gonna put a camera angle on here that you guys can appreciate. It's a little bit me getting used to it because I got a camera right over here that I keep wanting to look at, and because that's what I'm more used to. But nonetheless, I figured I'd do a little alternating back and forth. But that's my thoughts on the market. It's been a frustrating market on the whole for me over the past couple of weeks. I haven't taken any big losses, mainly because I've been able to keep the risk very, very tight. I think I've had 5 trades so far this month. I took 2 today, both of them in SQQQ. One of them I got out really quick because I thought the market might bounce. It didn't. It started falling apart. So I jumped back into it again. But I made like 2% off of those today. Not bad. But I took a couple, like 1% here, 1% there on QID so far this month. I think on 3 different occasions, or maybe 4. And so that's not easy. That's not easy. I mean, the risk is tight, so it's not hurting me at all. And I know one good trade and it wipes it all out. But that's a result of me, keeping the stop losses tight. But man, sometimes you don't think this market can go any higher. It's hitting up against all these resistance levels. Technically, the trades make sense. I don't regret any of the trades. I just sometimes hate the outcomes of those trades, because when you're looking at reward to risk ratios, right? The reward to risk ratios just because they might be favorable doesn't mean that they're going to play out in the favor of risk, or the favor of reward. Sometimes they tap that risk, and then all of a sudden you're taking a loss. But the key to all of it is that you're keeping the risk small, so that when you do get a trade that hits the reward side of it, you're doubling or tripling the amount that you have been risking. So that's how it plays into it for me. That's why I haven't been jumping on this on the boat to the long side. And to the same thing, when you have poor reward risk ratio to where the risk is far greater than the reward, doesn't mean that the reward can't play out in your favor. It just means that if it doesn't, you're taking a lot bigger loss than what you would have had it touch the reward side instead. So that's where, as traders, we can get frustrated, where we feel like, okay, this isn't, I'm not cut out for this or whatever. And you have to talk to yourself. You have to, remind yourself, why do you use the reward to risk ratios? Because when you do get those winning trades, they far outsize the losing trades. So with that being said, let's look at some of y'all's charts here, huh? What do we got up first here? We got SI, Coin, and VERU, and EOG's favorite, SoFi. Let's knock that out, huh? So with SoFi here, start backwards on his requests. Man, it's been like a minute since we've done one of these things. I almost have to refamiliarize myself with all this stuff. But SoFi. So this is one that has been such a huge market darling. I think I tell you guys this all the time, but I get crazy reactions to this stock when I say anything negative about it. Not from EOG, but I'm just saying from like others in the social media sphere. But it's really not a bad looking chart at this point in time, right? I wouldn't be surprised if ultimately it goes lower just because the market starts to reverse and go back down again. But what you have here is this nice basing pattern. So I want to be very exact with this, because I want to make sure if I'm getting out, it is definitely breaking out. This, with like a lot of your other single dollar stocks, you're going to have a lot bigger risk to the upside, but good grief. I mean, it had a rough day today. It was down 5%, but if it gets back above this basing pattern, like let's say 865, becomes a much better trade setup there. So the problem with 865 to the long side, if you get in along at 865, then where do you get out if it goes against you? I mean, ideally 704, right? If it breaks below these lows from August 3rd, probably 704 that you're getting out at, and that kind of stinks. That's like what, 20%? I really don't want that. So what we really need to see is if it can reverse from here, maybe get some consolidation in the coming days just below this resistance level, just bounce around right below this resistance, this yellow line, and then it breaks out. Then you put that stop loss, like maybe at, maybe it's like $8 or $7.98 instead, and that would be ideal. So be careful with this candle here, especially if it tries to fill this gap. You have kind of a nasty gap action here going on that I really wouldn't want to be holding if price decided to start filling that, because it could take it all the way down to like the sixes. What else do we got here from EOG? Man, you guys are in full force today. All right, I like seeing that. SI, Silvergate Corp. And I'm looking at a lot of these stocks for the first time in a long time, because I don't look at all these stocks every day. So that's the whole point behind user requests. One of the good things from it is that I actually get some good ideas from you guys, which, like even SoFi, probably outside of my wheelhouse in terms of risk tolerance, but it is a nice chart that I'll probably watch in the coming days just to see how it plays out. SI had a nice breakout. You have some support here at the 10-day moving average. That's this orange line right here. As long as it holds that orange line, I think that it's a good trade. You know, if it closes below it, you might have some intraday dips below it. As long as it's not a strong move below it or a close below it, I think the trade remains intact. And then let's see, what else do we have here? Coin and VERU. Okay, so coin, very similar. Look at this. How similar is those charts to SoFi? Again, yeah, Kramer. Kramer, he made a popular meme off of it, you know, bashing it after he praised it or whatever, but kind of looks like is that like a bull flat? I don't know. I'm just trying to see that consolidation's nice. I mean, either way, it's kind of like a bullish wedge maybe in the short term, but look for whether or not it can break above today's highs and start that rally back up again. I mean, it was down 11% today. That's hefty. It's in the gap. So that's one way to play it. Maybe not the preferred way. Maybe what I would probably look to do, forget this whole bullish wedge breakout pattern here, is maybe try to play it off of this like 78 level, but don't just do it. Okay, it's hit 78. I'm all along on this one, right? Wait to see if it can bounce or not. Wait to see if the market's still trying to climb higher. And if you have both of those things going in your favor, then maybe it becomes a good, worthwhile trade setup. And then VERU. Yeah, this one's crazy, huh? Yeah, it looks like I've done some work on it in the past, but holy shnikes. That's a Tommy Boy reference for those who know that movie. You can make the case that it's like no, hold on. I would probably say like that. That's probably like your ascending triangle pattern trying to play out there. Such a large, I mean, it's up 36% today. So if you're long on it, that's great. You could just be stuck in this range. I mean, it went right up to the top end of this range and then it sold off again. So you got to be aware of what you're inside of right now. And it's a range that has not yet really been able to push through. So you're up 36% in a stock that's range bound. For me, I'm taking some heavy profits off the table. Okay. All right. So we talk about GOOGL, and it's the same thing as really as Goog. But nonetheless, I'll see. Still in the habit of typing Google. I always trade. There's no real reason behind it. I just always trade Google. GOOGL. Also, don't ever call it Alphabet either. But again, similar chart pattern there. It's pulled back to this level. Actually, it looks like. Let's look at this one here. Yeah, it looks a little bit more better charted here on Google than it did Goog, just because these two levels hit better. But nonetheless, if you do it like, yeah, they're pretty much the same. I was just double checking. You got this gap right down in here. See that gap right there? That could get filled here in the coming days. You also got another gap right down here that hasn't been filled. Really disappointing to me that Google wasn't able to hold the breakout level. That's a big deal right there, that this breakout level didn't hold today. It could still reverse higher if it can get back above that support level, maybe a stop loss because it was able to hold the Wednesday lows, yesterday's lows. Maybe it can hold those lows again, and you can put the stop loss really tight at that point. This was a trade I really gave a lot of consideration to getting into today. I just didn't want to chase it to the upside when it was way over my trigger price. Like I was looking at 120.15. This thing was trading up at, above 122 at the open. It skewed my reward to risk ratio too much, and I had to pass on it. And thankful I did. Robert Slawinski. We're going to be in a choppy market. It definitely felt like that at certain times until yesterday's CPI report when we had that huge gap higher. Now we're getting like the sell-off today that probably trapped a lot of buyers, especially those who bought at the open today. But yeah, I mean, you look at, I'm not trying to just go over all the FANG stocks specifically, but you look at Amazon, right? Down at 4 out of the last 5 out of the last 8 trading sessions, yet, it hasn't really gone anywhere. It's very choppy. So yeah, it's a very good point that you're making. And like KB said, yeah, I don't like the chop either. I like some direction. I like for there to be a definitive direction going forward. If the voice is pausing a little bit, that's probably more or less the software. I'm working on using a different software going forward. So My apologies if that is happening. Thanks, EOG. Let's see here. Kevin here from the Trading Block. Hey, Kevin. All right. I'm glad you're able to make it, man. That's good. Can you give your thoughts on WBA? Good divvy stock, right? I think it pay out like 4%. Just kind of curious if I had any other notes on this one here from writing it up. But yeah, declining trend line here overall. Broke it. But check this out here. What kind of intrigues me about this is the cup and handle pattern that has formed in recent days. And I've been trading with Kevin for a while. For those who don't know, he's in the Trading Block. Good guy. Comes up with some fascinating charts all the time. He always comes up with good stuff that I like. No pressure going forward or anything, but I do like the charts that he and the stuff that he discovers. Oftentimes it's stuff that doesn't show up on my radar. The WBA, this is a cup and handle pattern. So yes, you got the declining trend line that's broken. Let's forget about that for a moment. Let's just focus in on this cup and handle pattern. Might even be better seen. Yeah, let's look at it from this is a 30-minute chart. Let's go to the hour. So you got the cup. Well, you got the cup, right? Right there. This is your big cup. And then you got the handle. So that's essentially what it is. Big round base, small little handle, and then it breaks out. So on the daily, that's exactly what you got here. It breaks out, but then it gave up most of its gains, but it's sitting right on support. So it's not technically a head fake, but what you want to see is how does it perform tomorrow? Good thing about this one is you can actually put the stop loss below the handle here, it looks like, at like 38.60 and still have a very good reward to risk ratio. If this one keeps popping higher, there's good opportunity maybe for it to go maybe up to like this 43.90 to 43.95 level before really hitting any substantial resistance. UAA, man, I haven't looked at this one in a little while either. UAA, it just hasn't popped up on my screen. It's nothing against it or anything. It just hasn't shown itself recently. Maybe I should put it on my must-watch list because I do like tracking this one. So the one thing that stands out right out of the gate is this big gap pattern. You got a big gap right there. So if it can get above, we were to say like 1093 or so, and it can push its way into 1151, then you're solidly into that gap right there. And then it has the opportunity to move up into the 14s. So I do like that. Where there's really not a trade to be had at this point. What I would like to see on this trade would be like a move all the way up to like resistance right here. And then for it to chop around a little bit like what we were talking about on, was it SoFi? Yeah, SoFi. Chop around a little bit and then break back out. And that would be an ideal trade setup. Thanks, Tobias, for that one. F from Alex, and then he wants a follow-up on BA. So F is actually a pretty good one. This is one I've got on my bullish watch list right now. Really nice chart. You got a bull flag pattern there. See that? Really good stuff. Trying to make them equal in length there. But yeah, bull flag pattern, but it's not breaking out of it just yet. So if we can get, let's say, a move tomorrow above 15, let's see, would 1593 be enough? I think 1593 would be enough. So if you get a move above 1593, it can hold that level with a stop loss below 1513, like maybe like 1511 or something like that. Then it's not a bad trade setup. I think it looks pretty good. BA. This I actually have a do not trade list that I keep. What is one of the FSLY that tends to be on? I think that one's still on there. BA has been on there a long time because every time I traded this stock, I swear it seemed like a plane crashed out of the sky. And I'm not trying to be like, belittling the whole event of a plane crashing out, but it was just from a stock market trading standpoint. Every time I did it, it seemed like there was another crash. And the headline risk on it got a little bit too much for me. And I haven't traded it since. I think some people were getting annoyed. It's like, can we just never trade Boeing again? And so I was like, you know what? I kind of feel the same way too. And I feel like there's this crazy headline risk associated with it. It does make it hard. but you do have some resistance. I'm coming around to possibly trading it again, though. I will say that. Just because it's on my do not trade list doesn't mean I will never trade it again. I just have to think long and hard before I'm willing to trade it actually again. But this decline trend line, I'm just seeing as I'm talking to you guys here. This goes back to 2019. What is that, about March or so? It goes back to March all the way down. It's been popping off of it each time. It broke above it. Then it traded above it for a while, bouncing off of it. And then it came all the way back down to 113 and bounced off of it again. So if this is like the end of the short-term rally for this stock, if it comes back down and hits like 93, it may be a good buy at that point. That's not going to happen anytime soon. That'd almost be like a 50% decline, right? But it shows you too how far this thing has rallied, though, like from 112 all the way up to 167. And that's what, in 2 months. I mean, there's a lot of stocks out there, like Plug, for instance. It's rallied 100% in essentially less than a month. But yeah, BA, careful of this 179 resistance. I do think that's something to be watchful of. You also have some consolidation here. That's really nice. If it broke out, that would be good. But again, you got the resistance just above it. You got the 200-day moving average, which you can see has rejected price time and time again from here and here and here and here and all over the place. So it's something to be respected for sure. And it's converging with a massive resistance level going all the way across. Let's see, QS. This is always a stock that I'm like hoping one day I have a reason to go buy it from a long-term standpoint. They make these like solid state batteries that could really be nice for electrical vehicles because I'm pretty sure those things would run a whole lot longer. But I think they're still trying to get that technology or something down. But good basing pattern. 13. See, it had a head fake today, and that's what kind of throws me off on this thing a little bit. That head fake. I mean, if it can hold like 13.13 into the close tomorrow, maybe it becomes a better ideal trade setup. But there's a lot of head fakes out there today. And then probably like a low below the 1161 level. So it's a wide, that's a really wide stop loss. Maybe what, 15%? Boy, that's a hard one to justify, guys. But overall, I mean, I do like the basing pattern. I think it's promising, but these stocks also have a lot of volatility to them right now. Thanks, Swipe 650. I appreciate that. Right back at you, Skyheart. Can you do SQQQ? Yes, I'm actually in SQQQ right now. But here's the thing. When you chart SQQQ, I never remember how many Qs I actually said. But when you do SQQQ, you got to be really doing it against the NASDAQ 100 because it's based off of the NASDAQ 100. So I go right back to the NASDAQ 100. And yes, we're dealing with a nice little price rejection here. Tomorrow's going to be key. Can it get back below this declining trend line, which would signify a head fake really on yesterday's breakout? What do I think about crude oil? Well, if you look at like stocks, like not stocks, but commodities like wheat, right? A little bit of a curvature there, almost like a basing pattern that's forming. So there's all this talk, oh, we've hit peak inflation and all this other stuff. But you got wheat, you've got corn. You can see these things are starting to slightly tilt upwards, especially with corn. USO, starting to see a little bit of a potential double bottom right there on USO. So, yeah, I do think that we shouldn't just discount the fact that crude has a long ways to fall still and that inflation is going to come down. These things shoot right back up. I can tell you, market is not going to like that. And even with the good news about the CPI report yesterday, you still saw some pretty hefty rallies. And what did I also see today? XLB up 0.34%, XLE up 3.4%. What does that remind you of? It reminds you of when in the beginning of this year when you had energy and you had materials just rallying like crazy to start the year. And that could be the case again where you see everything else struggle while those two rally. AFRM, let's take a gander at it here. Yeah, I mean, there definitely seems to be a breakout here in recent days. That's actually a pretty solid level to stage a breakout off of. What I also like about it here on this breakout, okay, it breaks out a little bit and then it comes right back down. Did I move this thing a little bit? No, I didn't. It almost comes down to retest in the breakout level and then it shoots higher again, which gives you a second chance to get into it. The only bad part is it was a gap on the the resumption to the upside. Let's see. CFVI. This sounds like a biotech or something. Let's see, I don't even know. Yeah, this one here, I couldn't tell you anything on this one. I wish I could. I think I remember this one now. This was like back in the old days, right? With all the SPACs and everything, a year or two ago, where everybody was buying up those SPACs as fast as they could. I don't know. I mean, it doesn't even look like it's really moved at all in recent days. I'd be hard pressed to want to make any kind of assumptions on that one. So EOG played VERU earnings. Wow, yeah. So 36%. So you did pretty good on that one that we just covered here just a moment ago. And then Robert is thinking short VERU is my option. Here's the thing, like trying to short a stock like this that just made a 36% run. Yeah, it came off of 18, so it's significantly off of those highs. But only thing I would say about that is, I don't know, man. You're trying to short a stock. It seems obvious. It's like, okay, maybe this is too much, but then you're trying to jump in front of a freight train, hoping that it stops. Maybe it gaps up higher tomorrow. It's at 18 or 19 tomorrow, and then you're just getting margin called, and you don't want that. It's better to wait for the breakdown first. And one day, despite being off of its highs of the day, it's still up 36%. I wouldn't want to jump that. Let's see. Kevin, the market doesn't seem to care about inflation, interest rates, declining earnings, or lower forward guidance anymore. Do you think it could possibly go down 20% and revisit the lows? 100%. Yeah, I absolutely think that that's a possibility still with this market. I know it doesn't feel that way with what we've seen over the recent days, but I mean, I think it was the 2000.com bubble. I think there was like 6 or 7 20% rallies during that time span. And so it's not unusual to see these bear market rallies. I've been a little bit frustrated. I think you can remember me from like June 22nd to July 12th. I didn't even make a single trade. I was just, sitting on my hands waiting for me to get a clue on this market. And so these bear market rallies can go a lot further than you expect, but more times than not, it's not the bottom. There's usually this capitulation, this like complete washout. And I just haven't really seen it. In fact, I would say, if anything, the selling has actually been very orderly. The buying has been very chaotic. But you're right, though. The market doesn't care about it. I mean, I think I was joking about it the other day. I think they could announce that, the end of humanity is near and that a meteorite's going to, hit the market. And everybody be like rushing to their computers to buy whatever dip that would cost. But good question. Thoughts on Baba? I can knock that one out here. Let's do that. Alibaba. Haven't traded this one in a long time. There's a lot of Chinese risk associated with this one, just because delisting possibilities and everything else. A lot of people are very nervous about this one. There has been opportunities to trade it. I haven't taken any of them just because you don't know when you're going to wake up and it's going to be down 8 or 9%, and I just really don't want anything to do with that. So, but overall, right now I don't see and you could make this case that, okay, if it can break this little short-term declining trend line off of the July highs, that would be a buy. But I think I would be more inclined to just wait for it to steady a little bit. There is some support right here off of these. If I could ever draw the lines right, there is some support here off of the March lows. So that's encouraging there. But what you need to see is whether or not it can break out of this kind of range that it's been in since March and then push back above, let's say like 124, and then it could become an appealing long setup. So let's see. I've been watching the SPY. These gaps are the only things pushing it higher. Once the market opens, the volume is decent, but it doesn't do much advancement. Very suspicious. Yeah, the volume has been pretty mediocre. I mean, the volume, that's kind of in line with what we see from a summer standpoint. Summer volume is very, very weak, and that's one of the things I hate about it. You don't get a lot of big moves typically now, but with us being in a recession and a bear market and everything, you do still get the big moves. It's just very much on low volume. But that's the one thing I would say about the volume that you're seeing right now. But in any case, good to be back doing one of these streams with you guys here. I kind of decorated the, or what is it? Hold on. I put a little don't quit there. Just a reminder, because trading is hard and it's very difficult. A lot of people are not successful in it, but I think a lot of times that's because of their own doing. They don't respect the risk. They're only got their eyes and minds set on the profits. And that's what I'm here for. That's what I'm trying to always tell you guys. Be mindful of the risk involved in the trades. Plan it out. Think in terms of reward to risk. Look at where the stock is at. Look at where it's been. Look at, to the left on the chart. Look at where it's going to the right, and try to make your judgments and decisions off of that. As always, let me know what you guys think about the new camera angle there. That would be this one right here. It's kind of cool. I like it a little bit, but let me know what you think about that, and let me know in the comments if you have any other questions, and we can chat it up some. Thank you guys. Cheers, and God bless.